So unlike a percent calculation from a normal moving average, Bollinger Band simply adds and subtracts a standard deviation calculation. I repeat, unlike a calculation from a normal moving average, Bollinger Band simply adds and subtracts a standard deviation calculation. So standard deviation is something that we also learned during our school days. So just to give you a little bit of a background of standard deviation. Standard deviation is a mathematical formula that measures volatility. Okay, so standard deviation is a mathematical formula that measures volatility. It is a statistic that measures the dispersion of a data set relative to its mean and is calculated as a square root of its variance. I know I'll be sounding as if I have taken back your to school days wherein we are discussing the formula of standard deviation, but I just want to give you a brief about what do you mean by standard deviation, especially for a basic recap. That's about it. The standard deviation is calculated as the square root of variance by determining each data point's deviation relative to the mean, and if at all the data points are further from the mean, there is a higher deviation within that particular data set. Ideally, the more spread out the data will be and the higher the standard deviation will be. For us, when it comes to Bollinger Band, standard deviation is a mathematical formula that measures volatility, which shows how the stock price can vary from its true value. Before going ahead deeper into our discussion about Bollinger Bands, wherein I'll be explaining things to you all, let me just take you all through this particular slide that we have prepared with regards to Bollinger Band.
Register for our free webinar. Download our app today. Link in description.